moment of rectitude or whatever the Fed would want to try to position it. We're going to lick inflation. We knew that was only a head fake, or whatever term people want to use for it. They're now back to their old inflationary ways. Buy gold, but underlying that is right now the interest rate on the dollar is actually pretty attractive. All you have to do is buy short-term bills, and you can get near 5%. That's a pretty good deal, and I bet that's way over most people's time preference at the moment. And so, there's not necessarily just purely from comparing the deal you get in gold versus comparing the deal you get in dollars, leaving aside that the dollar is unsound and there's all these other problems, the credit risk problems of the dollar and the inflation risk problem of the dollar. The interest rate equation right now is tilted pretty strongly in favor of the dollar. It's a pretty damn good deal. Now, if you buy 10-year treasuries, not only are you getting, it's more like 3.7%, but you also have the possibility of outsized capital gains when this reverses. And if you buy shortly before that, you could see a big gain. Buy the bond, hold it for a few months and sell it and see a giant gain. So I think there's a lot of people that wouldn't necessarily be buying gold because they're going to be looking at either just parking their money in bills or parking their money in longer term bonds and then waiting for the big gain. But when the Fed reverses and that happens, both of those factors go away and the unsoundness of the dollar then reverts as the main consideration. And I think aside from the Keynesian beauty contest, the Fed's going to be inflating again, increasing quantitative money, increasing prices, increasing gold, which isn't really right. Either theoretically and empirically, the data doesn't bear that out. However, the reasons for holding the dollar kind of strip away, and then you're back to, why am I holding this dollar again? If I want to hold savings, what do I hold my savings in is the perennial question. If real estate is a dead letter for a while, if equities are hugely problematic, at least for a while, if the interest rate in my basic dollar holding goes away, what am I going to put my savings into? Well, you could buy antique Ferraris, you could buy casks of aging whiskey, or you could buy gold. And I think gold will be the winner in that trade. And so, the next big price move up is probably when the Fed pivots, and it seems likely that we go back into a 2009 to 2011, sort of trend. When that, perhaps with some lag, but when the Fed does that, that seems the likely response.
You've been referring to gold. Do you see silver responding in synchronization with gold, or lagging behind it, or driven by completely different fundamentals in addition to the ones that you mentioned?
So I think there's some key differences between silver and gold, which I'll get into in a moment. But it bears emphasis that when you plot silver's correlation against various other commodities, it trades most correlated to gold than versus copper or crude oil or other things. That said, there's a key difference, and that is silver was always the commodity that wage earners, ordinary workers, turned to put their savings into. If you want to take 10% of your weekly wage and buy a monetary metal, gold doesn't really work very well. First of all, you have some really minuscule piece of gold, which is easy to lose and expensive to manufacture, and also not very exciting to hold a little fleck of gold. So if you put $50 into silver, on the other hand, you got a decent stack of coins. Let's say 2 1-ounce coins, or if you had smaller coins, you get a stack of them. And so it's the wage earner that turns to silver, whereas gold trades more against other capital assets by the capital asset owning class. That said, the capital owning class can buy silver as well if they think it's a deal. And so I think that keeps a lid on the gold-silver ratio. So going forward, I think silver is more sensitive to the plight of the wage earner. And so it depends on how this, Fed continuing to hike rates and then pivot when the carnage is great enough. How does that affect workers? And if workers are getting laid off in large numbers, then that doesn't necessarily bode well for silver. On the other hand, if the Fed says we're cutting rates, then you can see the capital classes, buy a lot of silver because they just smell a deal. If you can buy silver at a 85 to 1, much less 100 to 1 ratio against gold, why not buy some silver? We certainly have clients ask that question all the time. Isn't silver the better deal at these ratios? Yeah, it probably is. If there's any kind of reversion to the mean that's ever going to happen again, then I wouldn't necessarily be a buyer of silver at a ratio of 30 as we got in April of 2011. But, the ratio of 85 or 100 almost seems like you couldn't do wrong. So I think, that's the sort of immediate driver. The longer-term driver is the soundness of the dollar continues to rot and decay. And more and more people at the margin. Every time there's one of these little incidents, our monetary masters, I call them the dirigistes, who think that they can manipulate us into having a better economy for ourselves by manipulating the quantity, the value, or the price of money, i.e. interest rate. They don't understand the system that they prevail over. They're at best a race car driver who has no idea how a race car is engineered. They just know how to turn the steering wheel and when to hit the brake pedal a little bit. And every once in a while, there's some giant wreck that occurs, which is beyond their understanding. None of them predicted 2008. None of them predicted, other things that have happened. And but every time one of these little wreckages occurs, there's X number of people. It looks like you froze. Oh, there you're back. There's X number of people who suddenly turn to gold for the first time in their lives and think, I've never bought this asset before, but now I'm going to buy some. And I think this next pivot, there'll be a whole nother group of people who buy gold for the first time in their lives, just as they look at the problems in the monetary system and the problems with the central planners of the monetary system.